Good morning, traders. It is Thursday, 8:02 a.m. Chicago time on the 18th of August, 2016. Thanks for joining me. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the news, potential drivers in the market, the overall sentiment overnight is mixed, with the British pound leading the pack. As far as the issues that I follow. Crude oil's rallying, has pushed to 47.95, trading 47.92, currently up 0.84%. The British pound follows that. Looks like the British pound is up 0.8%. Then gold, Eurobond, DAX, Euro FX, the Treasury bond, U.S. Treasury, and then the Euro stocks are flat, and all of the other equities are lower. The Japanese yen is lower. The Japanese yen saw some poor numbers on exports. The strong Japanese yen, which is trading around 100.3 yen per dollar, has seen exports crash by 14% year over year in July, sharpest drop since 2009. At the same time, Japan's trade surplus expanded to 513 billion yen as imports tumbled by almost 25%. And then, of course, the Fed drove yesterday's trade. We were down much of the day and finished up on a neutral extreme day. The minutes showed that there was really no consensus for what to do next yet. There was no strong sentiment within the FOMC, and the market saw that as fairly bullish. Other than that, we just got Philly Fed about a half hour ago. Two was the expectation, and it was in line. Initial jobless claims came in at 262,000 versus 265 estimated, so slightly better. Continuing claims 2.175 million versus 2.14, slightly worse. As far as what we were expecting for today, we have U.S. leading index for July expecting 0.3. That's a half hour after the open, about an hour from now, 9 Central, 10 Eastern. And we're getting EIA natural gas at 9:30 Central, 10:30 Eastern, expecting 27. Fed Speaker Dudley is speaking at the same time as the leading index, also at 9 Central, 10 Eastern. And that's just about it. Let's switch gears and look at what was expected yesterday versus what we got. Just give me a second here. This screen has changed. Looks like I lost lost the spot where I was. Just one second. Here we go. Primary hypo looked like this. Was looking for a choppy open and a push up, which did not occur. The secondary hypo, let's find it. Again, I always like to show what we talked about. So the second hypo is in play yesterday, except that all bets are off once the FOMC announcement comes out, and then we ended up pushing all the way back up. But the initial plan was in play and worked out pretty well, as I announced yesterday that overall the market is trading hypo 2. Here's what we actually did. There it is. We did not have an open auction. We immediately attempted up and had a pretty strong rotation down, 6 points. We haven't seen that in a while. 6-point rotation down, a pretty good delta. Went sideways. We finally started rotating and tested this this gap zone here. We went right to the middle of the gap. The gap mid is 65 even, and the market turned at 65.50. Pretty strong rotation up, and that changed the bias completely with the up rotation being as strong as it was right here. This is why I track rotations. Um, and as I've always said, there are a billion ways to skin the market. There are a billion ways to trade, and whatever works for you is great. But I watch rotations very carefully. I put out a rotation study last night on Twitter, showing how the rotations have shrunk since the beginning of the year. Very shallow pullback, pushes to the IB high by one tick, and then we have a failed auction, and it rotated all the way down 7.5 points. This is, this is in the middle of, this is right up against the FOMC announcement, and then from there, it was just running to neutral extreme, which is what I was expecting into the close. Neutral extreme means we broke the low, we broke the high, the IB low, the IB high, and we closed near the extreme. And generally, we close near the extreme of the side that we break last. So this is a classic setup here for neutral extreme. Notice that heavy trading occurred right up against the prior day's point of control. So essentially, what this is saying is we like these prices up here, and we continue to trade them with pretty decent volume into the close. The high volume node and the prior day's point of control carried over to become the overnight point of control as well. So this 2180 area is a pretty decent battlefield right now, with the close being neutral extreme, with a high volume node being at the high. We expect a drift into the overnight session, and that's what we got, 2185 and a quarter. After it drifted up, the market basically rotated down and has pushed a low and is trading. Where is it trading? It's trading against the MC point of control. So what does that all mean? No, it sounds like gibberish. It basically means that we're in a very, very crowded area here. The MC point of control, we're up against the high volume node. This is just we're in between gap zones. We partially filled in gap zone yesterday. We have a gap zone above. Let's take a quick look and step back and see what things look like in the bigger picture. And here's how everything looks since the gap up on July 12th. Essentially, what we've done is we've been stuck in this really choppy zone for a while. Then we broke higher and got stuck in this choppy zone for a while. Pushed through the high and then gap. This is the gap zone above. This is the gap zone below. And what yesterday did is it essentially tested the entire range, basically top to bottom, of this most recent auction. So it traded everything from down here to up here, and now we're in the middle, right up against this high volume area. Why is this area high volume? It's being seen as an area to do a lot of trading because that's where the volume is. So if you watch order flow or you watch any sort of order flow analytics, you're essentially doing this type of analysis, but you're doing it on a very short-term basis. In the end, your order flow orders, whether it's market delta, jigsaw, bookmap, OFA, whatever, those orders, those trades end up being this profile over here. And I'm looking at the profile as a big picture view of what's going on. So that's the big picture. Stepping back into the overnight, here's the overnight. As I said, the overnight opened, it pushed to the 82.75, and then it rotated all the way through to the low, and now we're up against the low here. The way this is shaping up is it's likely to open in this range out of value. It's likely to test up, but I'm looking for today to to retrace some of what it did yesterday. Again, remember in the big picture, we're still in this boring balance zone. Now this looks a little noisy. Um, Looks a little noisy just because we've spent a lot of time here, but essentially what the market has done is, again, it has simply traded the living heck out of this area, and we have basically an island up top here, and we gapped up and down, and now we're back in line here. So the expectation for this morning, the primary expectation for this morning is an attempt higher. I'm looking for sellers to be found somewhere ahead of yesterday's high. We have a small double top here, a potential poke through, but I'm looking for sellers to come back in and to start moving this back down. That's the primary hypothesis. Okay, if it does not do this though, if it starts to play hypothesis number two, then we're setting up for yet again, new highs, new all-time highs. So if that's hypothesis number one, I'm looking on hypothesis number two for a test lower, and then finding its buyers and pushing through a retracement around the gap area, and in an attempt to higher for about 10 to 12 points of range. That would be hypo 2. Okay, so it would be moving out of this zone here through the gap, and then the next zone up becomes the target. The next point of control, which is 89.50, becomes the target. And the transition through here will likely set up new all-time highs. So that's all I had for you for today. Stage 5 traders, just remember we have our webinar AMA today. I'll catch you there. Good luck, and I'll talk to you tomorrow. Take care.